Hello beautiful people, it's Keith here from Performante. Today is January 21st, 2022, and in this video we'll be going over the Bitcoin futures market, covering things like open interest for both the bulls and bears, where the open interest is coming from, and why we think the open interest is mainly coming from the bears, or the sell side. Having too many shorts on one side of the trade can create an environment for short squeeze, and although we don't have the right market structure right now from a technical standpoint, the underlying fundamentals in terms of the futures market for a possible short squeeze to the upside is present in our view, and in this video, we'll be covering why. And if this is your first time watching, my name is Keith, and I'd love to welcome you to Performante Community Culture. We've created a community of like-minded crypto enthusiasts from all walks of life, sharing trade ideas, new projects, updates on existing projects, and that's really just scratching the surface. Discord is our home, so if you're interested in crypto, it's definitely the place to be. We've also created a social token called PCC for Performante Community Culture along the journey, and you could earn it all for free right from our Discord. Digital assets and a great community. Link is in our bio. And before diving in, we just want to say that we are not financial advisors, and this information is not financial advice. It's really just to consolidate all the info into a single video to help with the due diligence process so you can make an informed decision about Bitcoin and the cryptocurrency markets. Without further ado, let's jump right in. Now that we're at the data and analytics section, the main two charts that we're going to be taking a look at is the aggregated open interest of Bitcoin futures to the bottom left. And we're also going to be taking a look at the Bitcoin futures volume to the top left there. The first thing that we can see is in terms of the volume, Binance is taking the lead. We'll take a look at some percentages a little bit later in the video, but we see Binance take the lead in terms of the total volume. Bitgate, OKX, Bybit, and FTX are going to be the runner-ups in terms of the volume, but Binance is going to be the main exchange that a lot of the open interest is accumulated on. And we'll take a look at that in terms of the percentage a little bit later in the video. And the second chart that we want to take a look at is the aggregated open interest of Bitcoin futures. This is the open interest for all the different exchanges you see here added together, which means the aggregated open interest of Bitcoin futures. And something to note is this is actually represented in US dollar terms, not BTC. So the open interest, even if there's no new contracts added, if the value of Bitcoin increases, the open interest is automatically going to be increasing because the value of the open interest, the value of the open contracts for Bitcoin is increasing, even though there's no new contracts actually being created. So what we're going to do in this video is strip out the US dollar, strip out the price action of Bitcoin, and just denominate the open interest in Bitcoin so you can actually see the amount of contracts that are being either opened or closed without getting the volatility of the price action of Bitcoin. I'm going to show the clean chart that we're looking for denominated in Bitcoin, but you can kind of line it up with the price action of Bitcoin right here. Obviously, the tops are probably going to line up with the tops of Bitcoin because, like I said, the open interest changes even if there's no new contracts opened or contracts that are closed. The open interest will move because the value of the open interest is going to move up and down depending on the price action of Bitcoin. If Bitcoin's value moves to the upside, the open interest is going to move to the upside as well, even though there's no new contracts created. So what we're going to do is denominate the open interest in BTC so we can see the underlying contracts that are either opened or closed without considering the price action or volatility of Bitcoin. Before jumping into the open interest of BTC, same website here from CoinAnalyze, we can see, just to take a quick look at the liquidations recently for the month of January. Right now, we've seen just under $200 million in long liquidations in sells, and this is seen in the red list on the right-hand side, and we don't see a lot of shorts getting liquidated, around $32 million, which does make sense. So something to consider when you're looking at the open interest is the relative difference between the longs and shorts that are liquidated. So you can see lots of liquidations in the long-hand side. So theoretically, if you see a lot of the liquidations, you should see the open interest reduce in terms of BTC terms, because liquidations being contracts are closed. They're getting removed from the marketplace because they no longer have validity, because it got liquidated, it's terminated basically in short. So what we see right here is significant liquidations from the short side. So if we're taking a look at the open interest in Bitcoin terms, if we see a lot of longs that were liquidated in the market, we should see open interest close. So if we don't see that much open interest exiting or removing from the market, we know that there's a lot of shorts piling into the market that create the significant open interest. The last thing that we're going to be taking a look at here is the open interest per exchange. We can see that $4.4 billion in open interest is on Binance. The next highest one is FTX at 2.5 billion. Not exactly 50% of all open interest is on Binance, but it's getting close, which is a substantial amount. So Binance is going to be the main exchange that we want to take a look at or focusing on because it's covering almost 50% of all the open interest available for BTC futures. We also have OKX, Bybit, Deribit, BitMEX, and the rest. We'll mainly take a look at these three here. Now we're going to be taking a look at the denominated open interest of the Bitcoin futures market. And we can see this website here from CoinGlass. The period is going to be from around the COVID crash. We can see this is the dump that pushed the price down to 4.5K. And this is the current price action that we're at right now. And we can see we have all these different exchanges to choose from. So we're going to be taking a look at all the major exchanges that we saw on the previous pages that indicate that these particular exchanges have the most volume. So these are the exchanges that we're going to be focusing on most. We're starting off with Binance because this has the largest open interest by far. Not quite 50%, but getting there. We can see in terms of the denomination, in terms of the US dollar or Bitcoin, we're going to be denominating the open interest in Bitcoin. And if we remove the price action out of the equation when you're looking at open interest, we can see that open interest is still skyrocketing, making higher highs and higher lows on Binance. Before diving in, we'll take a look at some other ones. BitMEX isn't significant in terms of the volume. Bybit is a significant one. We are seeing lower highs, not a tremendous amount of open interest coming in on the Bybit exchange. CME, not a whole lot of interest here. We did see a significant amount of open interest climb up when we saw that previous all-time high, but since then it's been crawling back down, not really seeing a whole lot of interest from the institutional entities on the Chicago Mercantile Exchange. FTX is another big one, and we've seen open interest increase quite significantly, but within the recent price action, we have seen a little bit of a dip to the downside on FTX in terms of the open interest when you're denominating by BTC. Deribit is another one there. Not a whole lot of interesting data there to work with. Bitgate is the final one that we'll take a look at, and it has seen a lot of open interest accrue within the recent price action here. So the two main ones that we're going to be looking at is the Binance open interest, which shows a massive increase in the open interest, and the FTX one. So my understanding is when you're looking at the Binance open interest, it is at all-time highs. So when you're looking at liquidations, this is what I'm seeing. When you see a significant amount of long liquidations, like right now we see just under $200 million of long liquidations, this would be contracts getting removed from the open interest because they got liquidated by exchanges. There's no longer contracts that represent what was previously there for open interest. So we should see open interest move to the downside if we're seeing high long open interest. But in this case right here on Binance's chart, we see no real change. Open interest today just hit a new all-time high. So what this shows me is one of two options. Option one is the bulls creating the open interest on Binance just don't care. They're willing to eat up the downside move because on the longer term, they're expecting an aggressive push to the upside where they're going to be able to make back the current depreciating BTC that they're seeing for their contracts. Hopefully it's in time before the expiry date, but we don't exactly know. So that's option one. Option two is there's just not a lot of open interest coming from the longs, and the Binance exchange has a tremendous amount of open interest coming from the shorts. In my opinion, this is the higher likely probability because if you're a bull, if you're a long investor or trader, seeing that lower low, seeing that break in 40K was a major event, and I think a lot of investors and traders that are long would be exiting the market if you are a futures trader. But when you're looking at the open interest, when you're looking at the liquidations, there's a lot of liquidations for the longs, but there's no change in the open interest for Binance, meaning that either not a lot of people got liquidated on the long side, or there's just not a lot of people who are even having open trades on the long side, meaning that there's a lot of short open interest on Binance. Now moving to another exchange, FTX does show a little bit of weakness here when you're looking at the open interest, and this to me indicates that there are more longs on FTX than there are on Binance, because when we did see long liquidations, as we can see right here, just under $20 million of long liquidations in total, we do see a little bit of a move to the downside in FTX open interest terms. And this shows that there was more long open interest on FTX, but now have been removed from the market, and there's going to be a higher amount of shorts on FTX compared to what we saw, let's say, on Jan 8th, Jan 9th, not Jan 10th, compared to where we currently are right now in terms of long open interest. So in terms of direction, open interest doesn't really indicate too much in terms of which way we could possibly go. Yes, if we do have significant open interest on the short side, there's a possible short squeeze available, or on the flip side, vice versa. If there's a lot of long open interest in the markets, it could cause for a liquidation event like we saw back in December, where there's a cascade of liquidations moving to the downside, and that's a very bearish event. So right now, in my opinion, we don't see a potential for a massive move to the downside where there's a liquidation event, because a lot of longs are already liquidated, especially from the early December move to the downside. That was a significant liquidation event that occurred that had a lot more longs liquidated than we are currently seeing right now. So there's not a tremendous amount of interest from the buyers or the longs where they're creating a significant amount of open interest that could get liquidated. So if we are going to see the price action continue to move bearishly, I don't think it's going to be a massive dump to the downside. I think it's going to be more of a slow bleed where people are going to be selling spot instead of getting liquidated on the futures market. Thanks for tuning in today, covering our Bitcoin futures analysis. We went over things like open interest and why we think the open interest is more shifting on the short side than the long side. Give us your opinions, tell us what you think in the comments below, and until next time, have a good one, traders.